This week, Jerome Powell admitted that cryptocurrency is here to stay in the US. Algorand made a release that increases its block speed. Amazon are involved in a CBDC. Wisdom Tree and others have launched along with BlackRock to look for an ETF. The Federal Reserve have been hiding information, surprise, surprise. Companies in the EU are looking to be registered now under the MiCA regulations. We've got news about NFTs, and at the very end of this video, we're going to hop over and take a quick look at the charts for Bitcoin and some other tokens. So do stay tuned right until the end of this video so you don't miss out on anything that I'm going to say. So I'm going to start today with this really quick clip of Jerome Powell facing the Congress in relation to cryptocurrency and whether it's here or not to stay.
Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 2.1 trillion was, what was that a year ago? A lot higher.
So what have the big movers and shakers been doing this week? Well, we can see the Bitcoin is up 17%. Ethereum is up 12% on the week. But I'm going to hop over to the gainers and the losers, and I'm going to change this to 7 days and have a look at the movement in the last 7 days. So we can see some massive gains here. We can see Serum is up 146% in the week. Libra is up 100%. Oshi, which is a BRC20 token, is up 97%. TAP is up 86%. And we've got plenty of tokens, probably about 9 tokens that are above 50% increase just in this week alone. Now, always when there's gainers, there is always losers as well. And joining from last week, that was on the top losers list, Jesus Coin is still there, dropping another 50%. And this really shows you how volatile and how these meme coins can just get dumped onto the market, making great losses. Bitcoin Diamond is down 30%. Zambia's Gold 28%. Oh no, my protocol is down 25%. So a lot of movers and a lot of shaking going on in the market this week. And today being Friday, the market is down a little bit. It's down 1% in the market cap. We're up at 1.21 trillion in the market cap this week. So lots and lots of movement in the crypto prices this week, which we'll discuss as we talk about the news. Moving on from that quickly, what we're going to talk about now is Algorand, and that they have boosted performance in the latest protocol update. And the latest protocol update was this week, and it's now live on the mainnet. And what it does is it reduces block time to 3.3 seconds, which is more than 10% increase in speed, but it also maintains instant transaction finality. Now, Algorand's unique ability to instantly finalize transactions, along with other performance enhancements, empowers Algorand-based applications to deliver a user experience that's comparable to that of traditional Web 2 applications, whilst leveraging the security and decentralization inherent in blockchain technology. Now, along with this, Algorand have also had a number of other releases that are available to builders, such as Simulate, which is a simulator for smart contracts and is going to allow the developers just to test things rigorously. There's new developer capabilities as well. And there is a new tool called Conduct, which is a flexible and lightweight data access. So there's lots and lots of stuff going on the Algorand blockchain, but Algorand has been around quite a long time and it's really suffered price-wise. So Algorand is one of the charts that we're going to look at the end of this video. Hopping over to another story now, and when I read this story, it really scared me a little bit, and I'll tell you exactly why. Amazon are collaborating in a pilot program for new CBDCs proposed by the IMF and the central bank. Now, it's not that Amazon are involved in this that surprises me, but let's go on and talk about this a little bit. This white paper was produced in collaboration with the IMF, with a bank in Italy, a bank in Korea, and it's paired with a pilot program that Amazon and other corporate giants are participating in. So large central organizations are participating in this. Now, this is what scares the living bejesus out of me. According to the white paper, the prototypes aim to demonstrate a concept called purpose-bound money. This is what scares a huge amount of people about CBDCs. It's the programmability of money. And this actually allows senders to specify conditions, such as how long the funds are valid for and the types of shops that it can actually be used in. And they can specify this when they're making transfer of the digital money across the different systems. This is what everybody has been warning us all about. It's the control. It's the fact that they can give you money and they can say, well, you can only spend it in XYZ shop. And if you've bought too much alcohol, they're not going to let you spend any more. They won't let you spend it on cigarettes. And it's going to be totally controlled. And this is one of the major fears about CBDCs out there in the market. So this is definitely something to watch out for, because it's not exactly the way we would like things to go. Now, I am in favour of governments coming on board with CBDCs as long as they're not controlling the money. Now, the reason why I'm actually in favour of it is because it just makes it a natural progression then for people to move into cryptocurrency if all money is digital in the first place. But this type of control, not a hope. There is no way in the world I would be favourable for control like this in any shape or in any form. And the stories out there is that's all the governments want to do with these CBDCs. Moving on to the next story, Wisdom Tree, Invesco follow BlackRock with spot Bitcoin ETF applications. Now, these have put in applications before and they've failed. But it's this news of institutional money that's made Bitcoin pump this week, because it looks like there's going to be a huge amount of institutional money pouring into the market if these ETFs are actually approved. Now, it takes, read somewhere around 200 odd days for the SEC to actually approve an ETF. So it's a long way off before we'll have a final decision on any of these. But with an ETF, what happens is people get to buy shares in this Bitcoin fund as such. But the likes of BlackRock, the likes of Wisdom Tree, Invesco, what they'll have to do is actually buy Bitcoin and hold it in reserves to back up the people that are the money that people are investing in this. So what are these worth at the moment? Well, Wisdom Tree, it is stated to currently hold around 93 billion in assets under asset management. So that's a huge amount of money, and just a fraction of that coming into the crypto sphere would be absolutely amazing. I mean, 1% of that is nearly $1 billion on top of the current market cap. Now, these have made 2 previous attempts to secure approval for a spot Bitcoin ETF, and both of them were rejected in the past. So it'll be interesting to see if they are continuously rejected. Now, Invesco is another major player, and they have as much as 1.49 trillion under its asset management, and these have also applied for a Bitcoin ETF. Now, what these are saying is, well, look, if investors can come to us, it makes the US an awful lot more secure, because it means that they don't have to go to places like FTX that actually collapsed, and they're playing off the FTX collapse as a way to win the SEC over, in this case for an ETF. Now, staying in the US for a moment, and what I'm sharing here is the Federal Reserve's payment system master account database. Now, Congress has been grilling the Federal Reserve, the Fed, about this for quite some time, wanting to get access to this. And now it's actually been released, and what it's shown is that there's over 400 organizations that are involved in this that aren't actually, I have the right number here, 414 Fed account holders are uninsured institutions, most of which have no federal regulator. Now, this is pretty scary because they have access to the Federal Reserve master accounts. And if the Fed are giving these to unregulated and uninsured institutes, it doesn't look good. And it really explains why the Fed were so slow in passing over this information. I'm going to move over to the EU at the moment because there's been a lot of talk, and I've mentioned it quite a few times, about MiCA and how this is going to help crypto adoption across the EU. And Crédit Agricole gains crypto custody registration in France. Now, these are a asset servicing arm of the banking giants Crédit Agricole and Santander, and they've been registered by the French regulators to provide crypto custodial services. So this is great news for the EU, and it joins other traditional financial firms such as Societe Generale Forge, AXA Investment Managers, and these have been recognised under one of the most advanced crypto regulation frameworks in Europe, as the European Union prepares to impose the licensing rules known as MiCA. So these have 4.6 trillion euro worth of assets in their custody, and they've been trying to get crypto regulation since 2021. So more institutional money this time coming from the Eurozone, a huge amount, as I said, 4.6 trillion euros coming from the Eurozone. And as I said, if only 1% of all of these funds actually make it into Bitcoin, you're going to see massive buying pressure on Bitcoin and the price going up. And this could be a good narrative kicking off the bull run for next year. So the next little bit of news, and I'm just going to mention this briefly because I don't think this is actually going to happen. And Ethereum developers proposed raising validator limit to 2,048 Ether from 32 Ether. Now, my take on this is, heck, how centralized do you want Ethereum to become? 2,400 or 2,048 Ether, who the heck can afford that except for the likes of Lido Stake Ether and these sort of protocols? People can't actually afford this, and it goes against what crypto is all about and the fact that everybody can get involved, because this straight away means that the normal person, even 32 Ether, the normal person doesn't have, let alone 2,000 Ether for people to actually run a validator on Ethereum. Now, I don't really talk too much about NFTs at all here on the show, but there has been some news in NFTs that I want to share with you today. And first piece of news is that Arrows Capital sells a piece of artwork via NFT for 6.2 million. And this is the artwork that they actually sold. You know, I thought we had moved on quite a lot from JPEGs being the thing in NFTs. We can see NFT utility coming across in Web2 brands with the likes of Nike Swoosh, and Nike Swoosh maybe partnering with Fortnite. And we've got all these fidgetals when it comes to digital fashion and real fashion, and that's where NFTs is really breaking ground in terms of innovation. So to see these JPEG things, for me, and it's obviously only my opinion, I think 6.2 million, absolutely crazy. But that's not the only piece of NFT news I have for you this week. I'm also sharing with you that a story I find quite funny, and that's the German intelligence agency uses NFTs for cyber talent acquisition. So these are looking for new cyber talent, the top cyber talent, and they're actually using NFTs to try and find these. So we can see the NFTs down here. Some comments here. Can someone please tell me that this non-stop NFT collection by the BND called Dogs of BND was not funded by taxpayers' money? Now, it hasn't really got too much traction. They're selling quite cheaply. They're selling for around $100, and they haven't fully sold out at the moment. But the aim of these was to attract crypto talent, or not crypto talent, it was to attract cybersecurity talent to the German intelligence agency. So I think that is very, very innovative and quite funny, but very innovative of Germany to go ahead and do. Now, before we move on to the charts, I just want to show you this Bitcoin average mining costs chart. So the Bitcoin mining average is well above the current Bitcoin price. The Bitcoin price is there in yellow and the average mining cost is in blue. And we can see the current average mining cost is substantially higher. Then it's coming in up here around $29,000, nearly $30,000, when Bitcoin was 25,000. So this means that miners aren't in profit. Miners are actually in loss. So they're still selling their Bitcoin. They're not accumulating Bitcoin at all at the moment. And this is definitely an interesting chart to keep an eye on. And we know that the hash rate is increasing because of ordinals and inscriptions and stamps and all the other lovely stuff that's going on over on the Bitcoin blockchain. So this is definitely worth keeping an eye on, that the mining costs aren't working out too well for them, but they are making additional profits now in fees from the different transactions that's happening on the blockchain. So now with all of that said and done, let's have a quick look at some charts, because I did look at charts last week and I don't always look at charts here on the show because obviously I'm afraid of getting it wrong and people making decisions based on my information when I'm telling you it's not financial advice, it's what I'm looking at in the charts. And what I looked at in the charts last week was the whole moving average and how we've dropped below that on the Bitcoin chart. Now, before we look at the Bitcoin chart, this is actually the Algorand chart here, and this is the daily Algorand chart. And the other day, Algorand dropped well below 10 cent, almost 9 cent. Now, it is back up to almost 13 cent at the moment, but this is lower than the lows that we had in December for Algorand. Now, Algorand has been around for quite some time, and I'm going to move on to the weekly chart here for a moment. And we can see the all-time high of Algorand was $3.40 back in 2019 when it released and it went on to mainnet. And since then, we see the bull market and we've seen the chart going back down, but we're still under the whole. If we scroll this chart out, we're still under the whole. We're still under the 50 MA closing average. And if we look at the RSI, we've been oversold on the RSI for quite some time. Basically been in the oversold area below 40 since around May 2022. So over a year now. So is this a good time to be buying Algorand? Well, again, it depends on your risk profile. For me, I will be scooping up a little bag of this because these are the lowest prices that the Algorand have seen in this bear market. And there is definite room for uptick on this, at least over the 50-day moving average in, the shorter term, as in come before the next bull run next year or the year after. This year we may go above the 50-day moving average. We may even climb up above here to around 40 cent. And as we're down here now at about 14, 15 cent, that would be well over 100% increase. Now, why is this tank so much compared to other coins? Well, there was an aggressive mining, or there was an aggressive distribution of tokens, which I believe has slowed down now a little bit in terms of the token distribution. So that may have one impact, but we can see the building that's going on, and Algorand may be able to take on Solana in terms of speed and costs, which is yet to be seen. I'm going to jump straight now into the Bitcoin chart. And the Bitcoin chart, when we spoke last week, we were on this green candle here last week, and it was the second candle to close below the whole moving average. Now, the whole moving average hadn't turned red, But the turning red of it is usually more of a lagging indicator than a leading indicator. So we can see back over here, if we go to the peaks in the market, that we dropped below the whole moving average well before the whole actually turned red. And again, here we dropped below it a couple of weeks before it actually turned red. But when we drop below it, we do tend to stay below it for weeks and weeks. And this was the concern that I had last week when I put out the video last week. Now, if we just scroll in a little bit, we can see this trend line that I've drawn here. And this trend line has been in play back since January. And we can see on the weekly chart, we bounced straight off that. And this week, we are currently above that whole moving average. Now, it's Friday, so it's yet to see whether we're actually going to close above it. It's looking really strong. This is all the news of the institutes that are going to be buying Bitcoin. We don't know if they've already started and if they've been accumulating down at these lower phases, but it's definitely kicked off and sparked some inspiration in the market for people to start accumulating again. So I will definitely be keeping an eye on this. And don't forget that this comes in time where the SEC are suing everybody left, right and centre for their securities and their whatnot. Let's have a look at the Ethereum chart, and we can see the Ethereum chart hasn't moved back above the whole moving average. And then if we look at the likes of Litecoin, we can see the whole on Litecoin has actually turned red, but we're staying above this 50-day moving average. Now with Litecoin has its halving coming up in August, and Litecoin has also not been deemed a security in any way. If we look at XRP, we can see on XRP that we're still above the moving average here, above the 50 days. Some other tokens that I'm looking at are Radix. Radix is coming out with its Babylon release in a month and a half or something like that. So there's a lot of stuff going on with Radix. There is also a huge amount of stuff going on with Stacks as well. Stacks being a layer 2 on top of the Bitcoin blockchain. So that's it for this week, folks. If you enjoyed this video, don't forget, as I said, to subscribe to my channel and smash that like button so other people don't miss out on this video.